together with the financial system, even as I think there are going to be important elements of that system that are going to be challenged. I tend to think of the scrutiny that we are facing, along with a lot of others, as um, in the end and over a longer term, more positive than negative. There's no question that right now, the crypto economy that we're seeing take shape before our eyes is in a period of really, really intense growth and development. And of course, that means we're going to see growth and development of the laws and regulations that apply to that. And so, we fully expect and indeed welcome, scrutiny as part of all of that. But we think that if you look ahead and if you look out beyond the current issues that our industry is facing, what is the definition of a security as it applies to a digital asset? How should stable coins be regulated? Questions of that nature. We think there are just a number of important foundational conversations happening as well at various agencies. And we think that presents a huge opportunity, not just for Coinbase, but for the industry as a whole.
That's helpful. That's helpful. You know, do you have ideas on how you navigate it? Do you think, I mean, you talked about, having conversations with the agencies. Do you think that's important to have those conversations, sit down? 'Cause I think that part of the problem is they don't really understand some of these products and services.
Yeah, I certainly think that conversation and education is a critical foundation for moving past some of the misunderstandings and important and legitimate questions that have been raised about how crypto works. I don't think we get there as an industry by shaking our fist at the clouds. I don't think that sitting on line and bemoaning our the lack of understanding of how crypto works and what its real promise can be ultimately serves anyone's purpose, certainly the industry's. And that means that we have to spend a lot of time engaging with regulators and staffers and principals in the legislature, all at all levels, really, in order to get to a common framework, a common vocabulary of how these things work, and to understand what are the elements of crypto that fit very nicely within our existing regulatory frameworks, and what are the fundamental um, differences and unique qualities of crypto architecturally, technically, and even, dare I say, psychologically, that really do require a different way of thinking about how to keep investors safe and at the same time promote an important industry for the next century.
Super helpful. Can we spend a little time talking about product offerings? Um, Building on the widespread consumer adoption of cryptocurrencies recently, I mean, we've seen a lot of wallet offerings. We're now seeing a number of new products in the area, lending and payroll, um, increasingly popular offerings that, for example, offer holders of cryptocurrency the ability to earn interest by loaning their tokens to third parties.
Mhm.
With that has come some, yeah, we just talked about it, regulatory scrutiny. We heard that, SEC chairman um, said he was going to be very active in bringing cryptocurrency into investor protection framework. We have FinCEN, on the other hand, that continues to look at cryptocurrencies from a money transmission standpoint, and some of the states as well. So given all of this, kind of where do you see opportunities for new product offerings in the crypto space?
Yeah, I will say that I love this question because as much as I love to talk about the regulations and laws that apply to crypto, I'm even more excited to talk about the products. And of course, there is an intersection between the two that's also very important to focus on. Let me just start by saying a few words about where I see and where we see new product offerings. It's clear to me that there is just a ton of promise in a number of different areas. And you mentioned things like lending and payroll for sure, that have attracted an outsized interest among not just regulators and policymakers, but most importantly, our customers. because these are all ultimately market driven, and we're seeing just tremendous interest and adoption of those products in particular, even as they've only just really taken root in the crypto market. There are any number of other new technologies and products that I think are going to be critical for the continued success of crypto, and that are going to pose some really important, I think, regulatory challenges in the months and years ahead. I'll start with DeFi, but I also want to mention DAOs and NFTs. DeFi or decentralized finance, DAOs, of course, are decentralized autonomous organizations. They are fundamentally about expanding and developing streamlined and really ultimately frictionless ways of engaging with what are otherwise traditional commercial activities. And from a legal perspective, Obrea, the decentralized nature of both DeFi and DAOs it really can make them look a lot less like incremental advances or adaptations of existing technologies, and much more like wholesale reinventions. And then I also mentioned NFTs, which gets a lot of discussion these days, both by people inside the industry and out. And when it comes to NFTs, a lot of those projects don't seem to have characteristics anyway that are analogous to the money transmission activities of cryptocurrencies that have traditionally been the focus of most regulation. But they're really about fundamentally challenging our understanding of a whole host of other legal issues, things like intellectual property rights, and even potentially constitutional questions when it comes to speech, because of course NFTs are creative expressions. So there's just a lot happening right now when it comes to the product offerings that are built on crypto that go far beyond just the purchase and sale or trading of digital assets. And this means, from my perspective, we're going to need to develop and at least navigate a whole different set of regulatory frameworks in order to make sure that we strike the right balance.
That's right. That's right. That makes sense. Part of what I think of myself in the fintech financial services space is very much like a product counsel, like, helping to bring products to the market. And so in that context, I'm always thinking about, the regulators and the regulatory framework. Well, that's challenging in this space when we see that there's some jurisdictional fights between the regulators, including, the heads of the CFTC, Commodities Futures Trading Commission, as well as the SEC. You have the CFTC saying, touting itself as the primary cop on the beat, and then you have the SEC that's, in public comments saying that cryptocurrencies are securities that must be registered, and that, it's having a controlling interest. I noticed that Coinbase has advocated in some respect for the consolidation of regulation under one central authority. Do you believe that can be achieved in the U.S. In any existing federal agency, or do you think that would need to be accomplished through a new regulator? And what would that authority look like?
Well, first and foremost, I think it's important to underscore that even as a number of different agencies are, I think, struggling with the boundaries of their authority, maybe they're not struggling. Maybe they see very clearly that their authority extends as far as the eye can see. But it's clear that there are inconsistencies among regulators on these questions. I have no doubt that these regulators are operating in good faith and asking legitimate and fair questions about how best to think about a regulatory framework or scheme that involves a number of different participants. But to my mind, Obrea, the inconsistency that you see among regulators is a pretty healthy sign, pretty good indication, pretty strong signal that the existing frameworks that we have in place are not working, right? So, and that's not just, I think, an industry perspective or certainly a Coinbase perspective. If you look at the recent stablecoin report, for example, that was issued with the input and support of a number of different agencies, Treasury, the Fed, the SEC, the CFTC, and so on and so forth. There was one part of that report that was extremely unified, which was that the current legal system is not fit for purpose, at least when it comes to stable coins, and that Congress needed to act in order to change that legal framework. So I think there is even if grudgingly, there is at least an acceptance now, I think, among both the public and private actors that what we have at present doesn't really work. And that's one reason why in our own digital asset policy proposal, which you allude to, we did call for oversight and regulation by a single regulator. Whether that has to be a new regulator or an existing regulator, I don't have a particularly strong view on. I think there are ways for this to work under either of those approaches, but it's super important, however we get there, that this single regulator have some fundamental principles and powers at its disposal. I think there needs to be a clear registration path for centralized crypto entities. Coinbase is among them. I think it's really important that this single regulator work in tandem with an SRO to do some of the grittier and more granular work of oversight. I think it's really, really important that the single regulator have the authority to oversee the entire life cycle of digital asset activity and not just one piece of it or a less than complete set of pieces. It's critical that rules be adopted that emphasize transparency through tailored disclosures that make sense for crypto, that there be rules that protect consumers and investors from fraud and market manipulation and that promote efficiency and so forth, and ultimately competition and interoperability among different entities. So I think there are core elements of a framework that are critical, regardless of whether it's a framework that's administered or overseen by an existing regulator or not. Whether this is all achievable, I leave to others with a keener eye on Washington and the state of our politics today. But the most important thing is for us to start having these conversations, because if we can't even step forward with specific proposals that we would support if the political climate were there, I don't think we're going to be making much progress. And really, it's important that we make that progress now, given how fast the industry is evolving.
That's a really good point. And I think that what you see often is that some companies are, I won't say fearful, but hesitant to actually have those conversations with the regulators. But again, I think it could be extremely helpful in this context. You mentioned stable coins. So stable coins, are a type of cryptocurrency that offers this price stability, at least allegedly, as they are pegged to, a reserve asset like the U.S. dollar. And there have been a lot of discussions, especially in the context of the Biden administration. I know there has been a recently released working group report on stable coins, and there was a recommendation that Congress impose a new regulatory framework to deal with them.
Mm-hmm.
What role, if any, do you see stablecoins playing under the Biden administration, from a monetary policy standpoint, for example? Any thoughts around that?
Oh yeah, lots and lots of thoughts, Obrea, about that. But maybe I'll just begin by taking a step back, right, and talk a bit about at least why I believe this administration, or frankly any national government for that matter, should care about stablecoins as a monetary policy issue, right? Monetary policy, at least as I understand it, is the way that governments control their money supply, and they do that in order to make sure that we have stability and trust in currencies. And of course, because stable coins are pegged to a particular nation's currency, stable coins don't have the price volatility that we see with a lot of non-stable coins in crypto. But you mentioned the working group's stablecoins report. One of the concerns that came up in that report is that because stablecoins are not yet fully regulated. The government doesn't have a lot of oversight, perhaps even sufficient oversight into how they operate. And the key issue really has to do with the reserves that support these stable coins. Without any kind of oversight or adequate oversight, the working group put it well. I think there's a legitimate concern that as stablecoin investment continues to grow and grow and grow, there's at least a risk or a potential that the control of monetary policy will pass from the public to the private sector. And I want to be super clear. I think that concern is absolutely reasonable. I think it's important to ask these questions before a problem arises and before we can do anything about a problem that might arise. But if you look at the rise in use cases among users of stablecoins, I happen to know USDC, one particular stablecoin, better than the others, given Coinbase's role in supporting USDC. We are seeing that there are a growing number of people that are able to unlock financial transactions much more efficiently using these stable coins. And so it's not surprising that we see these initial use cases really taking root, for example, in remittances and cross-border payments. Use case for stable coins that has attracted a lot of, because the stable coins at the end of the day are able to offer stability and value, not just to the user and the recipient, but they are also able to provide immediate transactions and do so at very low cost relative to the alternatives in the traditional system. So, what I hope to see is that however this administration ultimately chooses to regulate stable coins, that they do so in a way that continues to promote these innovations and these efficiencies that are driving so much of the demand by the public for them, rather than ignoring those innovations and discouraging that interest that clearly is there among a lot of Americans frustrated with the existing.
Thank you. One thing you mentioned was cross-border transactions, and I think that's something I'd like to get your thoughts on. By their nature, cryptocurrencies allow seamless kind of cross-border transactions conducted over ledgers that are, at various locations. And so, given this, does the unique nature require some sort of global consensus or regulation, or some kind of transactions that will be subject to multiple legal regimes?
Yeah, I think this is important to talk about as well. From my perspective, it probably should be both. I think that consensus is important, but I also think that realistically, you're going to see overlapping and multiple legal regimes touch these particular types of transactions or remittances. I mean, the reality, of course, right, is that for any regulation to have the force of law in any jurisdiction, they're going to have to be adopted on a country by country basis. But the regulation of global activity, that we all see, and this is especially true when it comes to financial services, you're going to see leadership from one or more coordinating international body that will drive a lot of the conversation and the discussion, that will aggregate and synthesize, pull together views from a number of different countries, policymakers, and other participants in the market. And then, proliferate, publish, promote principles that these countries agree to in order to implement them within their own local regulatory regimes. So I think you're going to see every country go through this process on its own, in terms of proposing and adopting, implementing rules and so forth. And that means that there will from time to time be, I think, a certain amount of friction and perhaps even outright conflict between one country's version of these principles and another. But that's not an insurmountable challenge. That's something that we deal with all the time within the financial system. And I think that when it comes to crypto, a process like this for international coordination and promotion of best practices and standards could make a lot of sense. It allows for a certain degree of coordination, but it also has the benefit of being familiar to if not every domestic government, most of them, because of course, through things like the Basel Accords and so forth, they've already gone through this exercise with the traditional system. So I think there's a lot more thinking that needs to be done on this topic, but I think really, really important.
You also mentioned DeFi. So there's a lot of interest right now in DeFi, decentralized finance. And DeFi basically enables people to transact through smart contracts, for example, without some relying on an intermediary to broker the deal and without the kind of backing of the legal system. A lot of benefits potentially with DeFi. Um, for example, uh, the protocols can enable take out a collateralized loan in seconds and then send money to another part of the world, for example. Um, but to the extent you believe there are benefits with DeFi offerings, how can regulators and private parties work together to really facilitate the broader use and to reap some of these benefits? I think there's been quite a challenge for the industry.
Yeah, it's a huge challenge, and it's a huge challenge for regulators too. Look, I completely agree that there is incredible potential in DeFi, and it's going to raise a number of important questions and even challenges to a lot of traditional concepts. And I say this, on behalf of a company that built its brand and whatever success we've enjoyed up until this point, operating on a very different model. We are in many ways the quintessential centralized finance a company of crypto at Coinbase. But the technology is rapidly evolving, and most importantly, the market demand for DeFi protocols and the products that can be built on top of them is undeniable. And so we all need to adapt. And I think in that process of adapting to this new reality, I think the industry undoubtedly owns most of the responsibility for educating on how DeFi works and what the implications are for our existing regulatory regimes. Um, the reality is, of course, that regulators are resource constrained and can't always be expected to stay on top of every innovation in any part of the market, and the crypto market is certainly part of that. So I do think that as an industry, we have an important responsibility to look for opportunities to keep regulators educated and aware of how this will all work. Now, the one other thing I will say on this is that as I was alluding to earlier, I do think that this needs to be a conversation, a dialogue, Obrea, between the industry and regulators, and not a monologue. Um, I think that if we can take feedback from regulators about how DeFi is shaping our industry and the potential concerns and systemic risks that they're afraid of as a result of that, I think we're going to be in a much better position to be able to do something about that and structure or restructure protocols or products built on top of them to address those concerns up front. I think that's a much more productive approach than perhaps the alternative, which is, of course, to wait for one or more enforcement actions that may take years to ultimately resolve and then to course correct as a result of whatever may come of that. I just don't think that that's nearly as efficient, productive, or ultimately satisfying a way to get on top of where we think the DeFi economy is going to be taking us all.
Yes, that would be quite productive, and hopefully others can agree. But I think that's part of the problem, right? The lack of a consensus on how to move forward.
Yeah.
Well, all of this has been super helpful. I have one last question. So we've been talking very at a granular basis about some of the specific fintech and financial services regulatory issues. But I want to go out broader and really ask you, given your kind of role as Chief Legal Officer at Coinbase, what are some of the specific issues that are, I don't know, keeping you up at night, or that you really struggle with, or that are challenges for you specifically in your role?
Yeah, there are a lot of them to be sure. Just given how much crypto is changing every day. Look, I think the single most important um, uh, risk or threat for the industry as a whole is security. And so, that's one of the reasons why, we are investing, massive resources, a lot of senior leadership time and energy and attention on just evaluating the security perimeter of our exchange, looking ahead and trying to understand what the new threats are that we're seeing from both non-state and state actors, and also thinking about more and more ways to better educate and involve our customers in protecting against those types of risks. So I would say that security is certainly something that keeps me up at night. I think that there are important open questions about the regulatory frameworks that we alluded to in our earlier conversation that give me some worry. I think that it's critical for our policymakers and frankly, this audience to understand that we are operating here in the United States in an extraordinarily competitive global uh, 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 um, dynamic, and even as we are making choices here in the U.S. about the right framework, the right way to think about overseeing crypto, the same conversations are taking place in Singapore, in London, and everywhere else in the world. And crypto truly is a native global industry. And so we should expect to see other countries filling the void if we are not able to think about this in the most productive and healthy way. And I think that I'm still confident that the United States will continue to play a leadership role in this new market, and really should continue to play a leadership role in this new market. So I'm an optimist long term. I just think that we have a lot of work ahead to do, and that's one of the reasons I came to Coinbase was to play some part in that, and it's one of the reasons I'm so excited about what lies ahead for all of us who are working in crypto every day.
And
Well,
Paul,
thank you, Paul. This has been terrific.